against your Bitcoin as collateral. So you can deposit Bitcoin or purchase Bitcoin on Strike, and then you can draw a cash loan against that Bitcoin. Now, the LTV for now starts at 50%. So if you have $200,000 worth of Bitcoin, we'll allow you to borrow $100,000. You get access to that cash immediately. And Strike is a financial services platform. So you can instantly withdraw it to your bank. You can pay your bills. You can buy more Bitcoin with it if you'd like. So it is very useful. We've had customers that have put a down payment on a home. We've had customers that have financed an emergency surgery. We've had customers that have stacked more Bitcoin with it. So the reason the product is useful, and I think sometimes this gets misunderstood, is because it allows Bitcoiners to get access to the wealth they're creating in Bitcoin without having to part with the asset and create a taxable event. Because a lot of folks on the internet so far are like, why would I use this when I have a credit card that's giving me a cheaper term than you are? It's like, well, your credit card doesn't let you unlock your Bitcoin wealth. That's the point, is that Bitcoin 16 years ago was an asset that had zero market cap. It was worth nothing. Today, it's over 2 trillion. So that's a very simple way to understand that $2 trillion worth of community, Natalie. So the way the product works is I go out and I source capital partners. So folks that do have dollars that would be willing to lend them out in return for Bitcoin. And so when a customer deposits Bitcoin to us and gets a loan, I take the Bitcoin, that's the collateral, I go connect it with a pool of dollars, and I hand the customer the dollars. Now, as the collateral, and I work with the partner, I have to make sure that the partner has access to that collateral given there's a liquidation event. And so when customers see our terms, they'll see that the collateral is transferred to Strike and is either held securely by us or given access to the trusted partner. But under no circumstances in either the partner or us is there any rehypothecation or is the Bitcoin moving. So there's a little tricky legal language in that technically Strike giving access to a NYDIG, for example, could be considered rehypothecation. It's not. It's us giving access to of NYDIG, the capital. Is this making sense? And no one's rehypothecating anything. I think a lot of this legal language as a Bitcoiner, I don't think it's the inevitable solution. I think we're market leading in this respect, capital for a return. And right now, capital allocators, those that have a lot of money that finance loans in financial markets, they don't understand Bitcoin yet. They don't totally get that it's pristine collateral. And that's part of the journey that we're embarking on at Strike, is trying to pioneer single digit rates in this market. I've built a lot of very strong, powerful relationships with people with a lot of money over the last year in my life. And I'm dedicated to getting that capital into the Bitcoin collateralized lending space. So I understand the 12% is high. The reason is because it's an immature new market. We're on our first day of launch. We're a market leader. That just goes to show how early we are. I'm determined to get that number down. And the last thing I'll say is the problem with a HELOC loan or a mortgage is you have to own real estate, which I would consider a bit of a shit coin if you're owning it for an investment. If you're owning it because you have to sleep somewhere that isn't the curb on the street, then yes, please own real estate. But the problem with a mortgage is I have to own an asset that's only compounding 3 to 5% annually and is underperforming inflation. Whereas yes, 12% is kind of high. I think I'll be able to get that down to a single digit number within the next month. But for this 2 seconds, but then the next 2 seconds, the rate could go to 20%. The valuable thing about Strike's product is it's a fixed term loan. So you're getting a rate that you can count on for the next 12 months. Obviously, I would love to offer Bitcoiners like a 30-year Bitcoin loan. That'd be the best, right? I mean, like a 30-year mortgage. If you can get
like
a 30,
mortgage.
of course.
Give me those all day.
But those are obviously financed by effectively the US government, and they're not necessarily that economical to fix a rate for 30 years in a currency like the dollar that just goes down. So we're working on that. I'd love to offer different versions of the product. And what I would tell the community is, again, it's just so new. And I'm trying to be as transparent as we can in saying, I believe for Bitcoin to take the next leap in everyone's portfolio, whether it's institutions, whether it's individuals, family offices, is the ability to borrow against it. And when I took a look under the hood at this industry and how it works and what's available, there's just a lot of work to do. And we realized and validated with our customers that it is a service people would love. And we validated to ourselves that we are capable of doing the work that we think is out in front of us. So For a lot of this stuff, I would ask people to just be patient with us. I've seen a lot of businesses that are maybe smaller cap that are looking for newer life. I mean, Michael Saylor famously says, Bitcoin's on a need to know basis. We've seen a lot of businesses that maybe need Bitcoin. They were failing, they're rebranding, they're pivoting. And these are smaller cap that we didn't think could fit the institutional demand and the capital markets appetite that was building and that we've seen. And then for MicroStrategy, we think that there's an opportunity to grow beyond just acquiring Bitcoin. And the business was founded by Bitcoin technologists in Paulo, Tether, and myself. And we think that there's an opportunity to actually build products given access to the capital markets and a massive treasury, which is a unique asset on our balance sheet. So that was a lot of the high level vision. We think we're very unique in this pure play sense. And given the backers and the founders and our plans and our roadmap, what we filed in our business plan, we're very different. And we're excited. And we think this Bitcoin per share number, we intend to be able to grow that. And I think Bitcoiners are going to fall in love with it.
So the treasury is going to have 42,000 Bitcoin right off the bat?
Over 42,000 at closing of the transaction. So I think what people should know, because I've seen a lot of questions, is what we announced was to be polarizing. But the point that we were making in the slide is, 21, the startup upside we think is really important, is that an opportunity for investors to get in on the ground. This idea of premium to net asset value. The market doesn't know how to understand that, doesn't know how to challenge that. We think we can be extremely accretive in Bitcoin terms, which is this Bitcoin per share metric, and build a case that relative to other businesses with massive treasuries, we're going to be able to go out. We intend to go out and raise a lot of capital in an accretive way and post really performant Bitcoin denominated metrics. And that's what that slide said, with an ability to actually generate Bitcoin native cash flow with Bitcoin native business models. Our point is, the vision for us is to actually use our partners and the experience that I've had and the experience that Tether has had in finding high margin, high growth, cash generating opportunities in this sector, and leverage the capital markets in our treasury to provide value to the space. And so we want to be, the equity wherein which the capital markets can best participate in this Bitcoin story. And we measure that by being performant in Bitcoin. That's what this BPS and BRR is about. And that's what that slide was about. And it was, as OG Bitcoiners, I mean, I've known Tether for over a decade. There just weren't that many people in Bitcoin 13 years ago. And we've always philosophically aligned around what Bitcoin means. I mean, if you look at, Tether and myself, we overlapped in El Salvador, right? I was a material part of that story. They now are headquartered there and have carried the baton since. We've overlapped in the markets we serve. I mean, Tether and I have served Latin American markets, African markets in our careers where many other companies haven't. So very strong philosophical alignment. And I would say the conversation over the campfire, so to speak, between us went from, wow, as OG Bitcoiners, how fun and clever and creative is MicroStrategy? This is so much fun to cheer on and watch. And that was 4 or 5 years ago. And I would say maybe a year or two ago, it went from, man, there's such institutional demand. There's such a large capital markets appetite. And we feel like we can actually provide something that we want to see. I mean, it's be the change you want to see in the world, which is a pure play business that can actually build technology. This is proven businessmen, proven technologists in the space that have been immensely successful at metrics like gross profit, net profit. And I think one of the most underrated parts of Satoshi's innovation is the design of the system is that you can own as much as you want. It doesn't give you any more influence over the rules of the system. And so it's not threatening for institutions to get involved. They can buy it just like you can, as much as they want, with any appetite. And I think it's a little bit anti-Bitcoin to say we don't value those people's time and energy and their life story and their history and their participation in the global financial market. Bitcoin is just for us, this corner. I think it's stupid. And so I actually think we're living through part of my motivation to co-found 21 was the macro environment we're living through right now. And I think, I expect real rates to continue to be negative. And I think that there's a certain part of the financial system that needs help. And I think Bitcoin can solve their problem. I think it's good for Bitcoin. I think it's good for them. I think it's good for the world. And I don't we have the US, which naturally, because of the design of the system, has $36 trillion of debt and operates in what Trump calls a deficit, meaning we just push out pieces of paper and we operate trade unprofitably to import the stuff. And someone like China, who's become the best manufactured given the design of the system, they're operating in a surplus, which is $1 trillion plus. What actually happens here, Natalie, is when China or other countries operate in such a big surplus, in order for them to keep their exports competitive, meaning manufacture stuff and push it out to the rest of the world, they can't invest locally in the country. It would strengthen their currency and make their exports not as competitive because labor would be more expensive. So they take their trade surplus and they invest it in the Mag 7, in the NASDAQ, in US real estate. So the design of this financial system that we've built post the world wars in the US, about half of that, Natalie, we've monetized, we use as a savings account. Yep. So I would say the dollar will increasingly not be used for that. I don't think sovereign debt will either. I think we'll continue to see a rotation into money that carries the properties that the market demands, which is fixed supply, some scarcity element, divisibility, transportability, and ability to sovereignly hold it on your own. I think Bitcoin is going to be the best competitor to go after that market. Can the dollar remain the world reserve currency? Sure. Right? Like, listen, if the United States buys enough gold and Bitcoin, can Trump one day come out and say, we've devalued the debt enough, we own enough Bitcoin, all your dollars are backed by Bitcoin, consider problem solved? Yeah, of course. If they come out, devalue the debt enough and build a Bitcoin position that's $50 trillion over the next 10 years, problem solved. All your dollars are backed by Bitcoin. So that keeps the dollars, the world reserve currency, a deck of cards. And he found the lines. And we saw the most volatile bond market activity since COVID. So this Liberation Week was up there with some of the biggest financial market volatility. Yeah. The financial crisis, COVID. And so they found it. And now they're providing the liquidity. Now you're seeing M2 go up. Now you're seeing Treasury Scott Bessent come out and say, hey, we will propose Treasury buybacks. You're having Jamie Dimon say, please change the supplemental leverage ratio rule. Give us more leverage. So I think we're on the other side of liquidity negative. And my personal Bitcoin thesis is Bitcoin equals technology plus fiat liquidity. More fiat currency units that are issued and the more technology progresses, the more Bitcoin is going to be able to serve the world and, in my opinion, do well. And so I think it's a very exciting time for Bitcoin on the other side of 100K and seeing the US structurally short this volatility, have to provide liquidity to give participants leverage to lend it money and eventually debase the debt.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.